ACC numbers have come out. On a standalone basis, it looks like a good set of numbers. The revenues are up around 6.5%. EBITDA of the company has come in slightly lower than what the street was expecting, but the net profit, now that has jumped nearly 107% on a YY basis at close to 1,089 crore rupees. Apart from that, it was Canara Bank numbers which have also come in, and we are awaiting those numbers, but NII seems to be down by around 3% to close to 9,150 crore rupees, which is below the street estimate numbers. And if you look at the company's net profit, the NPA ratios have also come down on a sequential basis at around 0.89%. But sticking with ACC numbers, the EBITDA number that has jumped nearly 23% on a YY basis at close to 1,100 crore rupees. Margins have come in at close to 18.8% as against 18.4% that we had seen in the last year. And net profit, as I was mentioning, has jumped nearly 107% at close to 1,092 crore rupees as against 520 crore rupees in the last year. Now, EBITDA number as flashing on your screen is 1,116 crore as against 905 crore in the previous year. Well, moving on, let's also get in Gurmit Chadda, the managing partner and CIO with Complete Circle. So firstly, to start off with, sir, we are down nearly 13% from the all-time high that we had seen, and this correction phase continues in the market. How long do you expect this correction phase to continue for the market? Also, we have budget coming in this weekend. Do you expect some turnaround in the markets, at least post that?
Hi. Difficult to say and, predict the bottom of the market, but two, three things are playing out here, Sumit. One is, it started with the US trade, with money moving to US broadly from all emerging markets. I think what has worsened for us is the economic momentum slowdown, and earnings have been so far very weak. In fact, if you see the so far earnings scorecard, the misses have, far outnumbered the inline numbers. And, when the sentiment turns bad, any miss because of high valuations, the reaction is always extreme. We've seen that with CDSL. We've seen that with some of the good names. Thirdly, what is also happening is that due to the state election freebies being announced, for example, Maharashtra alone has spent 21,000 crores in the women welfare, which is the Latki Bahini Yojana. The market is probably also and government is likely to undershoot the capex target of 11 lakh crores by a decent margin. The market is trying to probably reprice, all the capex, which is, the railways, the defense, the capital goods, the power, all those kind of things which were basically moving up more on order book, because they believe that the government would like to probably, be biased a little more towards the rural welfare and the women welfare more. And I think that repricing is also now playing out. And that is why few pockets of market which were expensive, which were largely because of government high capex, are seeing bigger corrections like, defense, railways, energy, etc. So I think it's a combination of, our weak economic indicators and global factors. I think two, three things I'm watching out, which is some silver lining, is the dollar index is now below 108. I think if it can come to around 105, 106, there could be a breather in terms of FI outflows. The bond yields also now are not hardening too much. In fact, our own 10-year bond is also slightly softened. The US 10-year is now around 460. So I think these are the small technical indicators. And I think the big trigger we need is something positive domestically. I think we can't control foreign factors, external factors, but if you can get a bit of a momentum back in the economy, there are chances of finding a near-term bottom.
Right. And Gurmit, staying with this topic firstly, amid this fall, which sectors or stocks is something that you're advising your clients, and any tactical trade that you would initiate ahead of the budget?
I think just playing for the budget is not something which is our way of investing. But yes, a lot of good companies have corrected, where the long-term prospects look good. So we are adding some banks. The entire bank nifty is available at 13 times earnings. Players like Axis, Federal, SBI, they are just a little over book value, anywhere between 1.1 to 1.3 times book value. The private banks like ICICI, HDFC are below their, ICICI in particular has done very well. In fact, that's the only stock which has weathered the storm today a little bit on back of the numbers. So banks look good. We are adding some good auto ancillaries where corrections have been more than 30%. We believe that the vehicles in terms of transitioning to hybrid, electric, and other models is a more structural theme. A lot of auto ancillaries which are playing that theme, where cars are becoming smarter, cars are becoming more connected, cars are becoming more cleaner, more electric, more hybrid, will do well, especially like the likes of Uno, Minda, etc. We are also adding some defense names because there are a lot of defense modernization expected this year. There are a lot of orders which are pending. The government has only spent 40% of the defense budget in overall capex budget also being a miss. We expect some large back-ended orders coming in drones, in Pinaka rockets, in some of the other places.